Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, good evening, good evening, everybody. I just heard my neighbor with that Blazer or Bronco go by my house because every wall in my house was shaking. Every time he drive by, all I hear I'm that old man that's gonna start calling the police about everything. What do you call grumpy old men that complain about everything? I know you call the white women Karens. What you call the grumpy old black men? That's gonna be me. Whatever you call them, that's gonna be me. Jane. They gonna call my name. They call me Jane. You got to drop the S off it when I get mad. James ain't gonna be taking all this. Mr. James, that's gonna be me. Complain about everything. Good evening, man. How y'all doing? Oh man, we kind of slack tonight. We got a small crowd tonight. Shout out to everybody that's here. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Haranya Grande. That should be Big Spot if you don't hablo español. And you're tuned to another episode of the Intraday Price Action Recap. Hey, man, did Price do something today that caught you off guard? Did Price do anything today that caught you off guard? Did you not know what PD arrays to look at? Did the PD arrays you were looking at just get ignored? Just totally ignored. I don't mean overshot a little bit. I'm talking about just blew through it like it wasn't even here. You like, man, I was expecting to buy right there, but it just kept on going down. Or, man, I was expecting to sell right there and it just kept on going up. Or did you not have a clue as to what you should be putting on your charts? Do you feel any of the above? If so, let me know. Pull up. We'll talk about it. Now, shout out to everybody that's here. Joe, Lump, Light Skin Deborah, Kim, Steve, Hit Learning Chef, We slack tonight. Let's go ahead and get into it, man. Hey, I guess I'm losing my touch. Don't nobody want to come listen to me run my mouth no more. It's 2026. I guess I'm getting the picture. Don't nobody want to listen to no grumpy 53-year-old man talk about no stock stuff no more. So guess it's time for me to go on, move on, going on out the pasture. What they say? What they say? Time to send the mare out the pasture. Time to send the old boy all out the pasture. That old gray mare just ain't what it used to be. Old gray mare just ain't what it used to be. Let's see what I got. Trying to get my stuff together here. Trying to get my stuff together here. Trying to get my stuff together here. Doke. All right, man. All right. Get myself situated here. All right. So this is our daily chart right here. As you can see, yesterday, we finally made it up there to that volume imbalance. Who remember that volume imbalance right there? Y'all remember us talking about that volume imbalance right there? Who remember us talking about that volume imbalance right there? This one right here. Who remember us talking about it? Y'all remember us talking about that volume imbalance right there? We've been talking about that volume imbalance for a little while now. Right? It was this volume imbalance right there. There was, what else did we have? We had a suspension block down here, I think. We had a wick right there. That was the stuff we was watching this week. Let me see if my memory serves me correctly. All right. TBA. All right. That's that new PD array Michael taught about there. I put that in there. Premium wick. They go to wick. Yep. Premium wick. Uh-oh. Premium wick. Yep. There's the wick. Suspension block. I moved my suspension block. This is what a suspension block was, but I moved it here today. Right. I moved it there today. All right, let's see, it says 126, but it used to be down here because it was like 119 or 1219 or something like that. What's that date? 1219, right? That was the suspension block we was watching. It was inside our 20-day look back. So it was that PD array, and then that PD array. What's the day? Thursday, Wednesday, Monday, Tuesday, Monday, right? So this is this week's trading here. So 1, 2, 3, those were the PD arrays that we were watching based off of our 20-day look back. All right. And based off of our 20-day look back, the suspension block acted as support, right? Because we said we had already come down into the suspension block. We want to see it hold and send us back up into the volume imbalance that we was watching this week. We have been watching this for a while, because if y'all remember, we was anticipating it drawing up into there because going into Christmas, we was looking for the Santa Claus rally. Santa Claus rally started out very nice here. It did that came back down. Now, the Dow, on the other hand, Santa Claus is coming to town, right? Looking at the Dow. Santa Claus is coming to town. All new highs on the Dow. Santa Claus coming to town. What the ES looking like? All new highs on the ES. All right. All-time new highs on the ES. Did we poke up there? Nope. The SPX made it, but the ES didn't make it. The ES came close. ES came close, but the SPX actually made it. Right there, see? The XPX made it. All-time new highs on the SPX. Right there. Right. So the New York session of the S&P made all-time new highs. But the futures part of it, like including all the overnight trading and all that, all the Globex trading, didn't hit all-time highs just yet. But the S&P did hit all-time new highs. And then the Qs, the NASDAQ still hasn't made it either. Right? Still hasn't made it either. So Santa Claus came to town for the Dow and the ES, but the NASDAQ, our Santa Claus rally kind of pooted out. Right. And then on the last day of the Santa Claus rally, it started to rally again. Right. On the 5th, 6th, 7th, started to rally, and we ran into what we was looking for, the draw on liquidity back on week before last, 2 weeks ago. Right. Because we was looking for it. Well, the week of Christmas and the week after Christmas. That's when we was looking for price to draw up into that right there. That volume and balance there. And as you see, the week of Christmas, we started running toward it. Stop, pull back down into a discount into this suspension block right there. And then this week, no, last week, Monday, Tuesday, no, this week we started to rally up and we made it there. And then closed with a nice doji candle on Wednesday. And then today we pulled back down, right? Just fell short of another one of our 20-day look back PD raise lower quadrant right there of that wick right there. Just fell short of that lower quadrant. Traded down. There's a small volume imbalance there. Let me make this bigger. Everybody, Tim, make the screen bigger, man. I can't see it. I'm looking at it on my phone. I'm looking at it on my phone. Right. So as we traded down into our wick that we was watching, our suspension block that we were watching, right? Let me put something back over there because I deleted that suspension block. Well, I ain't gonna say I deleted it. I repurposed it for the one that was created yesterday. Clone. I said it was 1219. All right. Okay. So as we came back down, right, we did not make it back down to the upper quadrant of the suspension block here from our 20-day look back. And as you can see, as we came down, failed to make it to the low, nice discount sensitivity at the lower quadrant, used the consequent encroachment as support, used the upper quadrant as support, right? So each day we're stair stepping back up, right? And then today we came down, used the high as support, failed to get to the upper quadrant, and use that volume imbalance slash new day opening gap from the 6 as support also right there, right? Coming down slightly into that wick. And then also, like we said, failed to get to the lower quadrant of the wick, the premium wick from the second, right? Failed to get to that lower quadrant right there. All right. What I want to see Michael talk more about, and I've been studying it without him saying it, but I really want to see him talk about it more because he introduced a new PD array based off of a volume imbalance, right? And he said, this is what he said. He said, with the volume imbalance, right, over here, he took into account this large wick right here. And so he marked out the volume imbalance from the high of the volume imbalance. Instead of going to that body, he took it all the way down to that wick right there. Now, I don't know why he chose that. I don't know if it's because these wicks overlap here, and this is the only area where there's no overlap between these two candles, right? This is just like what I'm thinking about, like based off of the stuff he typically teaches, right? So let me hide this again, right? And I really want to see him teach more on this. But as we see here, right, this candle from the 22nd traded all the way up through this huge expansion candle up to here. All right. This is the high, right? This candle from the 24th traded down and overlapped this candle from this 22nd by this amount right here. Okay. So based off how he teaches things like balanced price ranges and all of that, right? Since there is a body here, buy side and sell side delivery here, there's a absence of the same thing over here on this side of that candle, right? So I'm just wondering if that's why he's counting from here all the way down to there as the imbalance, because there's not only a imbalance in the body right here, there's an imbalance because that wick doesn't overlap that portion of it too. And that's what I'm wondering. And I want to see more teaching on it so I can see how to use that in the future. Like, what's the correct way of marking that new PD array out in the future? Right. Um, for example, let me see if I can find something somewhere. I don't see anything. Yeah, I don't see anything over here. I don't see anything that would make me want to say, hey, can I do it there? But I just want more information on that so I'll know when to use that instead of marking just the volume and balance like here, right? Instead of just marking out just the volume and balance, when do I mark it out and then look at maybe that wick over there, right? And I'm not thinking about it in this case because that wick covers all of that. That wick covers that, right? I'm just wondering, I just want more teaching on that so I can understand how to mark that in the future because that was, that was an absolute gem on, hey, why is price stopping right there, right? Yes, there's a fair value gap right here, but and because he talked about putting the emphasis, he likes to put the emphasis on what's on this side, right? Me, I be looking at that as confluence, and he said he put the emphasis on that, and now he wholeheartedly admitted that because he put the emphasis on what's on this side over there, sometimes it may be a smaller PD array down here where he doesn't get a feel because he's demanding a more rigid price, a more algorithmic price. You know what I'm saying? And then that goes back to why I always focus on what we actually we selling off of this SIBI and just using this as confluence. All right. That just popped up in my mind. I'm sorry to have a squirrel moment on y'all like that. But let's go ahead and drop down. Look at a 60-minute chart real quick. Right. This is it's right here. It's all of today's trading right here, based off of a 60-minute time frame right there. We open up here at 6 o'clock, right? And then we close right here, right? That's all of today's, that last counter there, that's when we just opened up right there, right? But this is all of today's trading right there, all right? So last night, as you can see, we started out kind of consolidating. We dropped, consolidated for a couple of hours, dropped down, taking out yesterday's low, right? Traded back up into the high of that premium wick and into that SIBI that was created at 9 p.m. And we just kind of hung out there for a while, right? Hung out there. And then as we went into the 8 o'clock hour, so we see here, the London session was just a big consolidation until we got over here to 9 o'clock, right? So throughout the London kill zone, we do nothing but consolidate because this is the 3 a.m. candle there, right? And then this is the 5 a.m. counter there. So this is the London kill zone pretty much in there. Now it starts over here around 1:30, but the actual London session itself, blah, right? We did get a nice little pop up off of this low going into the beginning of the kill zone. But once we got into the actual London session, do nothing, right? Then over here at 8 o'clock, we popped up, took out the high, the London high, the overnight high based off of midnight, right? And this is another thing that I've been studying because Michael talked about it on his most recent video, right? It's something that I used to look at years ago, and then it just kind of slipped off my radar because I have so many things that I be watching. I don't want to overload my brain, but it's just looking at the overnight low and the overnight high based off of midnight, right? And as you see here, I got a new little I got a template that I reset again into my usage, and it says sell side liquidity ONL. That stands for overnight low, right? And as we see here on the 8 o'clock candle, we popped up and we took out the overnight high right there. Here, that was the overnight high after this, because this is our midnight candle there, right? Took out the overnight high. And then over here in the 9 o'clock hour, we immediately dropped down and took out the overnight low, right? And if you notice, I only have like downside targets marked out on my chart. I have overnight low, a and a prior day low over here, sell side. This is sell side from a prior day low. This is sell side from the overnight low. And then there's another one also on a lower time frame. It's another liquidity point right here on another time frame. We never made it to the prior day low. We immediately took out the overnight low. There's another low here on a lower time frame, and then we never made it to the prior day low from January 6th. All right, but I only had sales downside targets as I only had downside targets because overnight we had made a quick move down, then we came back up into the imbalance, and then we just stayed there consolidating, not showing a willingness to want to create an inversion, right? So until price would have gotten back above this, right, I was only looking for downside targets. Okay, only look for that. I could have swore I had this marked out. I thought I had that marked out. Did I delete it on accident? There's my right. Oh, there it is right there. I just had it hid. I just had it hid. Okay, I'm like, I could have swore I had that marked out this morning, but I had it hid. There it is. There it go. All right. So I had it hid. All right. So that's that SIBI right there. Until price would have gotten back above this SIBI, right? I was only looking for downside targets. All right. And that's the 60-minute. Go to a 15-minute time frame. There's that other liquidity point there that I was talking about. And you say, Tim, why'd you pick that weird liquidity point right there? All right. Tim, why'd you pick this weird liquidity point right there when there's a swing low right here? Good question. That right there is a regular session low. That's a AM session low from January the 6th. That's a regular trading hour low. That's why I picked that out. If I go to regular trading hours, all right, go to regular trading hours. And come here. All right. Right there. Regular trading hour low right there from the 6th. Right. So that's a regular trading hour low. That's the low that I was marking out right there. That's why I picked that weird candle, right? Because that's the January 6th morning low right there. All right. So regular trading hour low right there. And then I picked that daily low from electronic trading hours. I picked that daily low right there from electronic trading hours. And the reason why I picked that daily low is because that's just a daily low that was in close proximity to that regular trading hour low that I was watching. And it was just beyond the lower quadrant of this premium wick. And if we want to trade back down deeper into the suspension block that we was watching, that daily low was in the crosshairs. All right, if I turn that suspension block back on right there, right, that's the upper quadrant of that suspension block. So that daily low is right there, would be in the crosshairs. That's why I picked out that daily low. All right, makes sense. What do we talk about? Always knowing why you're putting PD arrays on your chart, right? Why am I putting that on my chart? Why did I pick that PD array? You don't want to just be guessing at what PD arrays to put on your chart. All right, looking at our 15-minute time frame here. You know what? I'm sick of this vertical thing. I ain't got enough real estate to work with. A vertical video just gonna have to suffer. Sick of it. I ain't got enough real estate to work with. All right, now utilize my whole screen. So here we go. We opened up over here at 6 o'clock. Right, like we said, we consolidated, we expanded down. Right, creating that SIBI right there. Now notice this, the hourly SIBI that I have marked out. Right, let's go back to the hourly. The hourly SIBI right there that we have marked out. Right, why am I looking for that? To see if we got back above it and use it as inversion. Why is that?
That turtle soup first SIBI out of that.
That's just the first SIBI coming.
The first SIBI out of that move down.
Yep, the first SIBI coming out of that move down right there. Right. So this, when we expanded here, that's the first imbalance coming down. Right. Now, it's a difference between the first one after a turtle soup. The first one after a turtle soup would be after, like here, after we came here and swept that. Now that's the first one after a turtle soup. See? Like we came above a high, they were immediately displaced down, breaking outside this area and creating our fair value gap there. That's the first one after a turtle soup, right? So that's the first one in this move down. The first one after a turtle soup. This one here is just the first one in that move down right there. Right.
And for clarification, like I know we consolidated a bit and then moved down. So this one coming out of here, because we stopped and consolidated, we're not going to go higher because it's up in that balance area. Is that why?
Talk about here?
No, to the left, the original after we hit yesterday up top. And after we start swinging down, even though we're expanding, we're still offering sell side within this balance area, right? Or do we? It's not part of the down move because we stopped and consolidated, correct?
Talk about this here.
Yeah, that first one that we created. Up above it.
Yeah, because this here. This is all above this high right there, and
right.
That's our little V. Remember my little V when we go above a high and come back, especially when we trade into a higher time frame PD array. Yeah. Right, we're looking at this right here as trap traders. Right. It like because we went up, came straight back down. So now we're looking at this as trap traders up there, and then this little consolidation right there is creating new structure for us to start looking to take part in. And you see here, right, we come back up to a premium and go back down because we come to a premium, time distortion, manipulate the highs, then drop.
And because it's trap traders, when nobody's manipulating, the market shouldn't have any reason to go up there because smart money doesn't want people to get out.
Yeah. Correct. Smart money. Yes. Yep. Smart money has gone above here, came to a PD array, right? So smart money was, as price was going up here, they were accumulating short positions, right? They selling from everybody that's buying and chasing this price, right? Then once it got up here, started coming back down. Now they're not going to let somebody who bought up here get back out. You see what I'm saying? They ain't gonna let it come back. They ain't gonna let it come back up here and let them get back out. It's like you want them to stay trapped up there. And then how can we identify in this case that they don't want it to go back up there? Start forming new structure right here by just consolidating. Right, start consolidating, and then we break down. Right, so now we got a new area from here to here to look at trading in. Why? Because this right here is the latest expansion of this entire dealing range right there. All right, because we come from here all the way down. Right, that's our total dealing range. Right, that's our total dealing range there, but we're not looking for it to come back to a premium of our overall dealing range because these are where the traders are trapped at. We're only going to look, like we always say, in our latest expansion of our overall dealing range. And as you see, we come back up to a premium into the first imbalance. And not only is it going into the first imbalance, right? It's going into the first imbalance when we took off there and then came back and got this change in the state of delivery. So now here we got our inversion fair value gap there, right? Got an inversion fair value gap there, got a SIBI there, send the premium, trade to it, time distortion, manipulate, and drop. All right. Hey man, shout out Yolanda, man. For those that's not in the game, Yolanda pulled up yesterday and led the tape reading session. I got to go full screen for this right here. I'm having like a proud Papa Bear moment right now. Proud big brother moment, whatever you want to call it. Yolanda pulled up, shared her screen, and walked us through the tape reading session from yesterday. Beautiful job. Did a beautiful job. I couldn't have did it better myself, right? Now, the only gripe I got about yesterday is the fact that when I'm talking, when I'm doing anything, it is crickets. I got to pull questions out of people like pulling teeth. Yesterday, when Yolanda was leading the class, everybody just interacting, talking, asking questions, just fully realized with the class participation all day long. But when I'm talking, crickets. I'm like, ain't nobody got no questions. Ain't nobody got nothing. Ain't nothing. Actually, she was talking about a first presentation fair value gap. Oh, why is that a first presentation? Oh, what makes it this? Oh, what makes it that? Hey, what about this? What about that? The same stuff I be saying. But when I asked if anybody got any questions, if I asked if anybody confused, oh no, we good. She said the same thing I said. Sick good. Good job, Yolanda. Good job, Yolanda.
Appreciate you. Learning from the best.
Everybody got questions. All right. So oh yeah. So that was the maybe you're intimidated. That was the first civvy, right? When we came out of here on the hourly. And then if we look over there, right, on the 15-minute, right? Same thing, right? It's the first coming out of here. Once we break out of there, then if we look back over there, boop, yep, you're right. It's there too, right? So you got the inversion here, that there. So I didn't mark out the 15-minute because it's engulfed inside the 1 hour and there was no need for me to refine it down. But as you see, we came here to consequent encroachment of the 1 hour. That's the midpoint right there. If you can't see that dotted line, and we also are respecting the 15-minute here, right? You can see the bodies there, right? All of the bodies are right there hovering around the high of that premium wick from the second, one of our 20-day look back PD arrays. All right. So then again, as you see there, we talked about time distortion, we talked about manipulating, and then we just dropped. After this right here, reset line, price sending you to the reset line. Non-farm payroll week. Non-farm payroll week, sending you to the reset line. After this drop right here, nothing. Ain't nothing going on but the rent. Right? Ain't nothing had Christmas tree trading. Red, green, red, green, red, green. On this 15-minute time frame right there. Are there opportunities inside there to trade within the range? Yes, it is. But this is not favorable price action to be trying to make no money. Right? You got to really know how to take your base hits. All right. Because we immediately took out the first sell side that I was watching. Right. Quickly went into the second sell side that I was watching. And then after that, showed no intention on getting to the lowest one. And it also showed no intention on continuing back up. Right? None whatsoever. Reset line. Look at a 5-minute chart. All right. On the 5-minute chart right there. Looking at that. On the 5-minute chart right here, I had this BISI marked out right there to see if price would go down and create an inversion. Right. No desire to create that inversion right there. Right. No desire to create that inversion on the 5-minute time frame. All right. So, like, hey, price ain't trying to go down and it ain't trying to go up. Okay. And then, you know what I didn't check today? I didn't check this today. If we come here, let's just come from the 930 drop and go down there. Yes, we actually did get back to a premium. All right. I didn't check this today to see if we got back to a premium, but we actually did get back to a premium from the 930 drop down. Right. So we actually did get back there. Oh, you know what? I didn't run it like that because I had my current day dealing range on. All right. And what I mean by that, let me hide this. Wick, don't need that. So I like to watch the previous day, right? That's my previous day dealing range right there. Right? No, that's the current day. Why does it say previous day? Oh, that's the previous day because we made a lower low, right? That's the low and we made a lower low. So that's the previous day. And then the current day is there. I just don't have it named over here. Let me name it. Let me name that. Right. So that's the current day. All right. So let me hide the previous day real quick. Put these next to each other. Right. So as you see here on the current day, this is the current day trading. This is the high from when we opened up last night to the low of the day. Right. And as you see here, we did come up and poke right above equilibrium. Right, we retraced back to equilibrium right there. Then we came back down and price just hung around right here. Right. And now you see why I marked out that 5-minute BISI. Who can tell me why I marked out that 5-minute BISI to see if we was gonna create an inversion right there? Outside of the fact that it was the first one. Who can tell me why I marked that out right there? Right. Talk to me.
It's at that 25% level as well.
Yes.
At that quadrant.
Yes, that lower quadrant for today. All right. So once we have our dealing range established, we're looking for things to happen at these quadrants right here. All right. So when we create this low, we came back up and made a BISI right there in line with that quadrant. So now I'm watching that. Will price use it to springboard and go higher, or will we come down and create an inversion to push us down into that further sell side down there. All right, so that's why I'm watching that on the.
Hey, Mr. Tim.
What's going on, my family? Y'all tried to scare me. Y'all ain't know I was gonna be ready for that. And then we got a inversion fair value gap down there. All right, at the bottom there. Okay. And as we see here on the 1 minute, that's that first SIBI that was created, right? As we went down and took out that low. And then as we come back up, right, we have a BISI here, but this right here is the first BISI where we go take out that liquidity, leaving this area right here after that turtle soup, right? So we have that BISI and that SIBI right there. And I just got the inversion marked out because I already had a BISI marked out here. So I didn't want the green on green, right? So I'm watching that to see if it supports price or if it relents and we get below it. And as you see here, this is why I was saying there were opportunities in there, right? There were opportunities in there because as we came up here and made that high, when we came back down, right? We came back down into the inversion, into the BISI, right? The first and the first. Not only did we get an institutional order flow entry off of that, but what do we say we expect price to do during high resistance? Go from what to what? Talk to me. During high resistance, we expect price to go from what to what?
Order blocks.
Yes, order blocks or rejection blocks. And if we look right here, we look to there, right there, that is a bullish order block. That right there is a propulsion block. We come down to the order block, to the imbalances that we're looking to see if it supports price. We go back up to the bearish order block. We come back down to that PD array again, back into that order block, right? This time we overshot the propulsion block, right? Letting us know that we're truly coming down into the order block now. Trade back up into the bearish order block, right? We come back down into the rejection block, right? Trade back up into the bearish order block after manipulating out some highs, right? And respecting the propulsion block, right? And we come back down, come all the way down, back into the last down close counter of that order block and into the lowest imbalance of that range, right? Then we rally back up, manipulating more highs back into the order block again, right? So we just look, you know, if you understand how, that's what we talked about. Selling, buying the lows, selling the highs, buying the lows, selling the highs until you're proven wrong, right? There are trading opportunities in the midst of the chop, but is it worth it? Mental capacity? Is it worth it from a risk management standpoint? Can you readily identify this type of trading when it's actually happening in real time, right? Are you an order block trader, or are you just trying to do it because Tim said, hey, you can trade order blocks during chop? Have you back tested it? Have you vetted it? I don't know. These just questions I'm asking, right? So as you see on the 1 minute time frame, not too favorable, not anything I personally want to be trying to trade, right? And it's expected. Why? If I squanch the chart up, right? If I squanch the chart all the way up, what do? Right? Consolidated, made a move, consolidated, made a move, consolidated, made a move, consolidated, right? It's normal after a big move for price just to. Now, this is a very large range to be consolidating, but it's normal because we've had this huge move down, right? And price just went into engineer liquidity mode. All right. Nothing fancy, nothing special about price today. Just typical non-farm payroll price action, man. That's all I got. What y'all got for me? If y'all ain't got nothing for me, we can go ahead and call it there, man. I'm hungry as a hostage anyway. I'm hungry as a hostage anyway. How was y'all day today, man? Shout out to everybody that came in a little bit later. See Rhonda slid up in here.
I have a question.
Okay.
So, no more, guys. When I was looking at the charts, so I was just since it was non-farm payroll, I was in my paper account. So what I saw, and you can tell me if I'm wrong, on that 5-minute chart.
Mm-hmm.
Okay.
I mean, Carter, he's not joking.
When we so
Uh-oh.
back up at 9, that let's see, that 9:15 fair value gap.
You said 9:15.
Mm-hmm.
All right, let's see. 9:30. 9. You talking about the 9:30 fair value
No,
gap?
that small 9:15 fair value gap.
Oh, 9:15.
Okay.
Oh,
Yeah.
right here. Right
Uh-huh.
here. Okay, yeah.
So, like I said, I went back, and so I papered some, but I didn't catch this until I went back and studied. But what I was using or thought process is we like you said, we went into our a high time frame because it's you go back, that's a 4-hour inversion gap right there, stacked with a 15-minute as well. Plus, like I said, we hit an anticipatory reaction point and we turned. So that gap I had marked out. And if I'm looking at it wrong, that's fine. It's
How about
like
here?
that 9:15, that 4-hour, yes.
4 hour.
It was the gap created on January the 7th at 6 a.m.
Mm-hmm.
Okay, so that was the one that initial gap one before we went and took out Friday's high. So I had
hold on before you go on. Now I'm gonna tell y'all this. When Michael was teaching about including the volume imbalance with your gaps, when he initially taught it, he said if the wick comes down past consequent encroachment, then just mark it like this. But I have seen him mark gaps like that. Even though that wick is coming down further than that, I've seen him mark gaps like that. I don't know if he's waiting to release something else or if he, I don't know. Because a lot of times he'll give us a piece of something because, this and this is pretty much the same thing because you're still trading inside of the imbalance, but it's just with more precision. But I just want to put that out there because sometimes I will see him mark it like that. But he did when he taught it. He said, if that wick is beyond consequent encroachment, then don't include the volume imbalance. Treat them as separate PD arrays like that.
All right. On the MNQ, there is no volume imbalance. So I had it from that wick. And that's the weird, it's a little bit weird. I know kind of still same price action, but there was not an evident volume on the MNQ.
Okay.
But since that was the initial gap before we went to take out that high, so I had as we come back down over it, I had it as a point that should offer resistance. Plus, we went over the midnight. So when we go back to that, Campbell, please stop yelling, please. And when we go back into the to that 5-minute, that's why I was saying it all lined up, and then you have that suspension block at that 5-minute. Am I looking at that right, or is that just you wouldn't mess with it still because it's NFP?
I mean, based off the fact that this is on the 5-minute right here, right?
Right.
This is on the 5-minute, and it's still within this area right here. So I'm not putting a lot of emphasis on it because we're in NFP and there's a lot of manipulation, as we can see with this long wick coming back above here all the way up into that order block. Now let me see what's going on here.
The reason I included it because even though it went in there, it was in that leg that went down below that last swing low. So still still, I know you're saying NFP. That's the only reason I included it, because it was in that expansion leg that went down below that. So like you're saying, a lot of manipulation. So you
and you
like trust in it.
And you're not wrong. You're not wrong. Like on any other like week or trading day, you know what I'm saying, you wouldn't be wrong. And I'm just looking through other time frames to see if there's any other confluent, because price is just really wicky and sloppy in here right now, right? So, and we already saw what the 5 minute was had going on, and then looking here at the 1 minute time frame, right? Now looking at the 1 minute here, right? See here, and now we can see it came back here on the 1 minute. Now this is the exact same thing that you was looking at on the 5 minute, but on the 1 minute. You see what I'm saying? Like, see how the imbalance is still here inside this range right there, but it overshot the 5 minute just to come back to the 1 minute and manipulate out that high right there, right? So you got that sloppiness, right? You got that sloppiness because of the NFP, because based off low resistance liquidity runs, right? There's no reason to come back here after we get down there, because price has already gone up, right? Came down, traded back up into here, right? Leaving this alone, and then actually broke structure. And then it came back with a long wick to come back up here. Once price leaves this, there's no reason to come back up here outside of manipulation. You see what I'm saying? There's no reason to come back up there outside of manipulation. So this is just that sloppiness of non-fund payroll. So that's why I say there's nothing wrong with what you marked out, because what you marked out on the 5 minute here is the exact same thing here, right? See, after we take that high and we break down, there's the imbalance right there, right? Even though we didn't break the structure until here, right? But that imbalance there is as we're coming with that displacement, right? So this right there, for this move here, that's just asking it to be a little bit more, give you a little bit better entry. But when you go to your 5 minute time frame, right, again, you can see here, right there, right? As we came down, we went up, came here, when we dropped, that's the first one there as we moving out of that area right there, right? So it's the same thing. So there's nothing wrong with marking that, because this is when we're coming out, got the imbalance, right? And now here, okay, boom, you're trading off of there because you're anticipating that high over there to stay in place, right?
But you've seen, makes sense. But you've seen doing NFP with it being heavily manipulated for it not to follow these rules and just rip up past all of that, right?
Yeah.
And that's just the risk you accept if you see your setup. Okay.
Yeah, that's the risk you accept, because that's why we got stops, right? We got stops saying, okay, I'm coming in and I'm risking it to there, right? Because based off of what the algorithm has done, right? I got an order block, right? And I got a rejection block to stop price from coming here, because that high should be safe based off what it's done, right? Based off what price has done, we've came up and taken out liquidity, right? We've come down here, traded up, failed to take out the liquidity, and traded down past that low right there, right? So now this high right here should stay in place, right? because we got an intermediate term high up there. That high should be protected. So since that high should be protected, I'm willing to sell this and I'm giving it to there, right? The swing high above there. That's my safe stop, right? Even though we got all this manipulation, that's why we got stops. And even if we got even more manipulation than you got taken out, that's just a part of being manipulated. But you have measurable risk. That's what you always hear me talk about. I got measurable risk now because based off what the algorithm has done, right? This should be protected. That should be, because once you get that intermediate term high, right? The short term highs should be protected also. They shouldn't take out the short. Once you get that intermediate term high, right? Just like we got this intermediate term low right here, right? After that intermediate term low right there, the short term lows are protected until we come up here and we break it. See what I'm saying? Once we came down, we broke that short term low and then create an intermediate term high, then we went down. Make sense?
Yeah, that does make sense. So once, like you say, you had a protected low, so keep coming and create order blocks. So those lows should be protected underneath until we go hit a area and then come back and break structure.
Mm-hmm.
Okay.
Yep. Exactly. Right. And one thing that we got to battle with every day and we got to learn to let go is the fear of being wrong. Right. We got to let go of the fear of being wrong, because it's not about am I right, am I wrong? It's about what signatures am I seeing? And now I got a measurable amount of risk, because sometimes my measurable risk ain't gonna be enough to get into that trade. Why? Because there's always going to be a level of manipulation, right? And if they're intended to manipulate out that buy side, but that's where I got my stop at based off of my measurable risk, then I'll get stopped out and it'll still going where I'll be completely right. But I just got stopped out because my pockets wasn't deep enough to put a stop all the way up here. You see what I'm saying? It's like, it's all about accepting the risk that you don't want to over leverage, because whenever you push that button, you're saying, I'm accepting this amount of risk, and this amount of risk isn't going to kill me. It's not going to blow my account. But if you over leverage, then we're going to be in a constant panic about, man, I hope my stop don't get hit. I hope my stop. When you're not over leveraged, you don't care nothing about that stop getting hit, because you're not over leveraged. You know it's not going to blow your account if you get stopped out. But when you're over leveraged, you panic, you sweat and hoping you don't get stopped out. Right. And then, if you haven't, dealt with the idea of I'm gonna be wrong sometime, or if you got to always be right, oh man, it's the wrong field to be in. Cause if you got to be right, boy, you about to spend a whole lot of money trying to prove that you're right. The market don't care nothing about you being right. Only thing the market care about is liquidity and inefficiencies. That's it. What else y'all got for me? Shout out Yolanda pulling up with the hard hit. Oh, wait a minute. Where RN Deborah come from? When she slid up in here?
I had to use my phone. I had to switch over.
What your laptop died?
Yeah.
Oh. Okay. Thought Sharon wanted to watch TV.
You funny.
Tell Sharon to get all the TV in while he can before you start looking at Love Island or something.
I got plenty of TVs.
Cheryl's, I ain't worried about that. I go in my man cave and look at TV. All she gonna do is come in there and sit on the couch next to you. talk about what you looking at.
You're right. You're absolutely right.
Uh-huh.
Hey, I was looking at Ryan Davis, a clip of Ryan Davis the other day. Ryan Davis said, talk about women, men love peace, and men value peace and women value happiness, right? And he was like, a man and a woman can be in the house together on opposite sides of the house, and she can be just as happy as she want to be. And then she gonna be like, it's too quiet in here. It sound like peace. Then she gonna know what she gonna do. She gonna walk on the other side of the house, say, let me go see what he doing.
Exactly.
So she get on the other side of the house, and he's just sitting there laying in the bed, looking off into space and smiling. And then he said, is she gonna say, oh, he looked like he had such peace? No, she not. She gonna say, what is Joker smiling back?
Yeah.
What is Joker smiling by?
What's on your mind?
Who he thinking about? Hey, boy, ain't he telling the truth? Ain't he telling the truth? So, Sherwin, when you sitting there trying to watch your TV, she gonna come there, flop down on the couch next to you. What you looking at?
It depends if I'm watching something pretty gory and bloody. Then she won't stay in here with me.
All she gonna do is stay in there and keep on screaming and jumping. She gonna, why you watching? Oh, why you watching this? Oh, turn it off. Let's watch something else. Oh, that's all she gonna do. I done tried that too. I be trying to put on the stuff that my wife don't want to look at, and then she sit over there on the couch looking at it anyway. And every time something happens, what you doing, man? I'm so sorry, that scared me. Why are you watching this? Because I want to watch it. Oh my goodness. Hey man, I appreciate y'all for hanging out with me, man. If you a Diamond member, we're gonna do a pre-market analysis tomorrow around 9ish. I say 9ish because school is back in and I'll be having to take my son to school. Sometime I'll be running late. So around 9ish, y'all pull up in the pre-market analysis channel. We'll get a little pre-market analysis in. Tomorrow is Friday. Remember, don't force it Friday. Tomorrow is non-farm payroll. I've been seeing a whole lot of news headlines pop out. You know what I'm saying? The president been doing a lot of different things. I saw one headline pop up, something about a veto. I didn't read it. I don't know what that was. It was stuff popping up about Venezuela, Venice with the oil. It was all kind of headlines been popping up. So we got a lot of stuff in the news that I seen a headline pop up saying that he want representatives to buy like 200 billion in something with bonds to try to help bring down the interest rates or something like that. It's a lot of headlines popping up. So whenever we be getting all of these headlines like this right here, especially around high manipulated news events, just be careful because they use news and they use headlines to manipulate the market, right? Because I want to say it was a weird time this morning or last night, whatever. I think it was early this morning, like around 6 something in the morning. It was just like a long spike candle. It was like a long spike candle. Let me see. Because when I was doing my chart prep this morning, I said, man, what is that candle? Right. See this 5-minute candle right here? That's the 6:30 candle. Let me go to a 1 minute time frame. I don't want to have to chop that off. All right. Let me go to a 1 minute time frame here. It was just some weird long candle, like right there. Just a long, weird candle right there at 6:30 in the morning. Right? And you see what that candle did? Right. You see what that candle did? Right here, 6:30 in the morning, it dropped down, right, and took out all of this sell side right here. Right? And then it went right back up. I don't know how fast it went. Let's drop down to 15 seconds to see. Less than 15 seconds. So you know that was just like just down there really quick. All right. That's classic manipulation right there. Whap out. I don't know what came out. I don't know if about somebody tweeted. I don't know if somebody, but classic manipulation. That's one 15-second candle that came down and took out all of that sell side coming all the way from when we had this expansion up at around 220, 220, between 220 and 225. When we expanded up there and did all this consolidating right there, wick that out in like one. Let me go to 5-second chart. Okay, this is a 5-second chart. So 2 candles, right? That's 2 candles. So less than 10 seconds, right? So the first 5-second, right? The first 5-second was here, right? Then the second 5-second went down there and then back up there and closed here within 5 seconds, right? Sorry, y'all, I'm in the rabbit hole now. So you know I'm gonna go down to like 1 second, right? You know I'm gonna go to 1 second. So there we go right there. So we got 1, 2, 3, 4, a doji, 5, 6, 7, right? 8, 9, 10, right? That's those 10 seconds right there. So those first 3 seconds was just straight down, heavy movement down, no top wick at all, straight down, closed at the bottom, pop back up a little bit, straight down, closed at the bottom, pop back a little bit, traded down, closed at the bottom, right? Opened up here, dropped down, then started rallying back up, doji, right? Go back up, right? There. Even on the 1 second chart, it's still, I just noticed that even on the 1 second chart, it's still, what's the name? All right. Even on the 1 second chart, you can still see the algorithm working. Still see the algorithm working. Yeah. Drop down, right? That's the first imbalance as we drop right there, right? As we're coming back out right here, right? We got this right here. Trap traders down there, right? As we come back up past this balanced price range right there, right? Close there. We have a BISI on top of a BISI. This is our breakaway, right? These are our trap traders down there. Retrace back down inside this BISI, right? Trade back up, close back above this first imbalance. Then we use it as support, as an inversion, right? Even on a 1 second chart, you can still see the algorithm being the algorithm. But what I don't understand is what could have came out and caused this, because that is very quick. That's very, for this time of day at 6:30 in the morning, that's very quick. That's some type of tweet, some type of news, some type of something that spooked the algorithm. Something happened, right? Something happened to spook the algorithm, because that is almost 40 points. That's almost a 40-point drop in less than 5 seconds, right? Almost a 40-point drop in less than 5 seconds. All right, man. That's it. If this was your first time tuning in to Tim's Tidbits, you probably ain't here no more because we've been on here for a while. But if it is your first time, hey, man, I appreciate you for hanging out. Hit the like button. The algorithm like when y'all hit the like button. Share it with somebody who you think might get something out of this right here. If you haven't taken advantage of the Smart Money Manuscript, first link in the description below. Now, I tell you, if you want to get the Smart Money Manuscript, right? If I was you, I would just hold on just for a minute, because I'm working on the magical Fibonacci tool, right? And the magical Fibonacci tool is going to be a twofer. Tim, what is a twofer? Right? When you purchase the magical Fibonacci tool, you're going to get access to the Smart Money Manuscript. And the reason why you get access to the Smart Money Manuscript when you purchase the magical Fibonacci tool is because the magical Fibonacci tool does you no good if you don't at least understand the ICT concepts. Right? There's no need for you to run and try to buy the magical Fibonacci tool without understanding the ICT concepts. And so to ensure that you're prepared in the way you need to be prepared, right? When you buy the magical Fibonacci tool, you're also going to get the Smart Money Manuscript. Now, yes, that means that the magical Fibonacci tool is going to cost a little bit more than a Smart Money Manuscript, right? But it won't be doubled, right? It won't be doubled. The Smart Money Manuscript is $69.99, right? The magical Fibonacci tool, I'm not finished with it yet, but right now I'm teetering between $89.99 or $99.99. That's what I'm teetering between, depending on how much I got to put into it, right? But for that 89 or 99, you get the magical Fibonacci tool and the Smart Money Manuscript. And please, if you do not understand the ICT concepts, if you don't know anything about them, please don't start trying to deep dive into the magical Fibonacci tool without at least going through part 4 of the Smart Money Manuscript, where we give a nice, solid introduction to the ICT concepts. Okay? Okay. All right. Y'all gonna support the magical Fibonacci tool? If y'all ain't gonna support it, I ain't even gonna put it out. Somebody told me they want a course called We Got Options. We buy them, we sell them. That's what somebody told me.
Along with that Fibonacci, that's fire. Thank you.
If you go on 185 South, it looks like traffic is backed up near Manchester Expressway exit. Oh no, my son was in that area. Hey, I'll see y'all tomorrow. I need to check on my seed. I'll see y'all tomorrow. Hey, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. I just big spot if you don't hablo Espanol. Y'all be safe out here in these trade streets, man. Gone. Yeah.